If the last recession got us to about 3.2 trillion deficit, the next one's going to get us to 4 or more, and that should overload the debt markets and destroy the dollar once and for all. All we need is one more recession. And why do I think that's coming this year? Well,
Okay, okay, I know a lot of you people probably like to wait to the last minute. Well, this is it. This is the last minute.
this is Rafi of the End Game Investor, and these are the Miles Franklin weekly specials. First, we have 1/4 ounce gold eagles. While supplies last, a minimum of 2 coins per order. These coins, the most recognizable, are only $65 over melt, which translates to about a 12.6% premium over the current spot price of about $2,060 per ounce. You won't find better premiums for these denominations of gold coin. Next, we have 1 ounce silver Noah's Ark coins, reminding us all that we are not the first to experience a global endgame, and we will all get through it as we did in the past. These coins are only $3.49 over spot, while supplies last. Finally, we have the 1 ounce silver Trump bar, Trump wanted for president design. These are pretty insane pieces of modern Americana that will be historically significant for many years, even centuries to come. These 1 ounce silver bars are only $3.15 over spot. Don't miss out on these because there are a very limited supply. Hey guys, Rafi here from the End Game Investor. Happy New Year. It's 2024. And yes, I do believe 2024 will be the year of the end game. A question that I often get is, how do you know that? Why do you think that? Well, I don't know anything for certain, but we're going to go through the top, I think it's 8 or 9 reasons why I think 2024 will be the year of the end game. We've got one financial crisis left to go through before the dollar is dead, and before it dies, it is crucial that you stack gold and silver if you haven't yet, because once the dollar is dead, there will be no other money. It will not be Bitcoin because Bitcoin is a dollar derivative. It will be gold and silver, mainly silver, because the dollar is right now a gold derivative. And once it is no longer trusted as a gold derivative, the public will have to return to silver. And as I've said before, I stack silver for the end game and I stack gold for after the end game. And as a quick reminder, the End Game Investor has moved to Substack. I will be publishing there 3 times a week, a market update, a newsletter. You can find it in the link in the description below at endgameinvestor.substack.com. Anyway, here are the top 8 reasons I believe 2024 will be the year of the endgame. There is a common misconception as to how long this inflationary cycle has been going on. Some people say since 2008, some people say since 1971, some people say since 1933 when FDR stole the gold supply. But the real answer is this inflationary cycle began 151 years ago, like Bacardi, 151.
Thanks. I needed that.
151 years ago, in 1873, the dollar was taken off of silver at a fixed ratio of 15.5 to 1 to gold. The dollar could no longer be redeemed in silver terms. It could only be redeemed in gold terms. This happened in 1873. You can see the chart here of silver. Here, this black line is when silver was demonetized, quote unquote, not literally demonetized, but statutorily demonetized. We had a bimetallic standard here, as you can see, as a stable silver price. And once the dollar turned to exclusively a gold derivative or a gold substitute, the price of silver fell to the merchandise price, falling lower and lower and lower and lower until the inflationary era begins in 1933, when FDR monopolizes the gold supply and starts to inflate like mad, a process that we continue to this day. So why did the inflationary cycle really begin in 1873? Because that is the first step. Taking silver out of circulation, out of the monetary standard of a derivative, is the first step towards inflationary doom. Because How are you going to monopolize a silver supply? How are you going to monopolize a money supply if silver is circulating? First, you have to control it by moving the dollar, moving the currency from silver to gold, because gold is a lot easier to centralize than silver is. Silver is everywhere, and silver is the money of the people. Once you move to a gold standard or an exclusively gold standard, all of the purchasing power moves from one metal exclusively to the other, from silver to gold, thereby impoverishing those who own silver and enriching those who own gold, meaning a transfer of wealth from the poor and the middle class to the wealthy. That was what happened in 1873. And once you have the ability to centralize the entire money supply by, say, stealing the entire gold supply, because you wouldn't be able to do that to silver, it's just too plentiful, then you can start inflating. Theoretically, if you had a gold dollar, an honest gold dollar, 100% backed, there'd be no need for silver. But the first step towards inflation is removing silver from the money standard. So we are in year 151 of this inflationary cycle. It's been going on long enough, and it's time for it to end. It began with silver being demonetized, and it will end with silver being remonetized when the dollar is no longer trusted as a gold substitute and the public moves to silver. We've seen it 3 times, and we will see it one more time. 15-1 is the bell ringing, so listen for it. It could happen this year. This chart was given to me by one of my subscribers, a physicist who did some nice work for me. And we see here the Fed's balance sheet. This is the curve of the Fed's balance sheet since 2014. I'll show you a zoomed out chart in a little bit in the next slide. But we see here this red line. I think it's red. It might be green. I'm not sure. This over here, this inflection point is when the repocalypse hit, and QT was shifted into QE again. We can see QT here from 2018 to September 2019 as the Fed's balance sheet shrunk and shrunk and shrunk very slowly, very gradually. But then that was the end. The repocalypse hit, and they had to start expanding their balance sheet again, printing money. And this was when gold broke out from its 6-year trading range once QT turned into QE. Now, the point of this is to show you the timing here. This is the current QT, quantitative tightening, the Fed shrinking its balance sheet here. You can see this little pivot here, this little thing here is the regional bank bailout. We've been following a linear trajectory here, and we are at this line here in 2024. And once we get to this point in 2024, this is August 31st, 2024, we will be 36% below this curve here. This curve here, this dashed line, is the double exponential curve, where I will show you in the next slide. The Fed balance sheet has to remain tangent to that curve, and once it goes below that curve, you risk a financial crisis, which is exactly what we saw right here. At this point, we were 36% below this double exponential curve, and this is the point where we will be 36% below the double exponential curve at this point, that curve being up here. This curve labeled number 2, that is by August 31st, 2024 at the current rate of quantitative tightening. I don't think we have to get that far, and I will show you why. So we have here the exponential curve number 1 and the double exponential curve. That means it's an exponential curve multiplied by 2, hence double. So we were following the single exponential curve on the Fed balance sheet. This is Fed liabilities, the Fed balance sheet basically. We were on the single exponential until we hit 2008, and then all of a sudden we had to curve on the tangent to the double exponential curve here. And you can see here we were bouncing off it from 2008 until about 2012. And then we crossed it. I think this is 2017. And we hit below it here. Here's again the repocalypse when the Fed had to move way back up to hit the double exponential curve again. And now we crossed it over here at the regional bank bailout, and now we're below it again. So once we hit around this area, we will have to hit this double exponential curve again, and you can see how fast it goes from there. This is end game magnitudes over here. This is reason number 4 why I believe the final financial crisis will occur this year. This is the repo market, the SOFR market, the amount of loans, overnight loans being made in the deep plumbing of the financial system. We just hit a new all-time high of 1.948 trillion, and I'm talking to you on January 3rd. These are the numbers for January 2nd. This we can see here is the repocalypse. This is when the repo rates started to go to 10% on September 17th, 2019. And that was right after a peak was reached over here in the repo market. And again, we had another financial crisis over here in 2020 lockdowns, another peak in the repo market. So we're hitting another peak right here. And you could say, could this just go infinitely higher and higher and higher? How do we know this is a peak? Well, we know it's a peak because there's only a finite amount of dollars in the system, and this is how many dollars are being traded every night, 1.948 trillion. As the Fed is shrinking its balance sheet, they are taking dollars out of circulation. So at a certain point, this market becomes starved of dollars, and that creates a repo crisis where interest rates go up to 10% or wherever they're going to go, just like they did during the apocalypse. And that causes the Fed to pivot to quantitative easing from quantitative tightening. And from there, you have the final financial crisis and the final printing. Here is reason number 5 that I believe the end game will occur in 2024 this year. And that is the Federal Reserve's losses are piling up week after week after week. The top chart here shows you their weekly losses. This is the zero line, so anything below here is a weekly loss from the Federal Reserve. They are losing about $2 billion a week now, and you can see their cumulative losses over here at 131 billion, 131.5 billion. And what does the loss of money or the loss of equity by a central bank mean? Well, a central bank's liability, its issuance, is the currency itself. If the Fed is losing money, that means the dollar is losing value. Maybe on the consumer level, we haven't quite seen the end of it yet, but imagine if a bank is losing money and you have your money there, what happens to your deposits? Well, they kind of go away if the bank goes bankrupt. The only reason that they don't go away is because the FDIC bails them out. So if the Federal Reserve itself is going bankrupt because it's racking up weekly losses, then it's the dollar itself that will go bankrupt. And that is another way to say hyperinflation. These losses will keep piling up, and they are made up by printing the money into existence, meaning there are $131.5 billion that are completely unbacked by anything, not backed by debt, not backed by gold, not backed by a damn thing, and that will still increase week after week after week. Here is reason number 6 why I believe the end game will hit in 2024. Here you can see the annual federal surplus or deficit since 1900. We see here this tiny little bump that you can barely see here is World War I. This a little bit more substantial bump here is World War II. This is a deficit. This was an all-time record deficit at that point. But you can see here that once we go off the gold standard, once Nixon closes the gold window, deficits keep increasing. We had a little bit of a window here during the Clinton administration of a surplus, but that did not last long. And since then, we have deficits that get more extreme and extreme by the year. Every time there is a little gray area recession here, this deficit gets worse and worse and worse, and we can expect that it will continue to get worse. The next and final financial crisis should bring the deficit to somewhere around, let's say, $4.5 trillion. If the last recession got us to about 3.2 trillion deficit, the next one's going to get us to 4 or more, and that should overload the debt markets and destroy the dollar once and for all. All we need is one more recession. And why do I think that's coming this year? Well, this is the money supply. Whenever the money supply shrinks for a long enough period of time, that almost by definition causes a recession, because money is debt in an inflationary system. And if the money supply is shrinking, you can't pay back that debt. And then banks start to fail. And when banks start to fail, the Fed has to print more money. So we're just waiting for this shrinkage. This black line is the money supply zero growth rate. If you're below that line, you're shrinking. And this line has been below the black line, below the absolute deflation line. And the money supply has been shrinking year over year since the beginning of 2022. This is by far the longest period of absolute deflation in all of monetary history recorded, modern history at least. And there is no way that you can persist with a shrinking money supply and not have a recession eventually. Now, the question is, what is preventing that recession from happening already? We've been in absolute deflation for a year, so why hasn't it hit yet? And the answer is this. The final reason why I believe the final financial crisis and the end game will happen this year in 2024. This is the reverse repos. I've showed this before. You can imagine this as the extra money in the system that cannot be loaned out. If it could be loaned out, they would have loaned it out already, and this explains why the money supply is shrinking. If there is extra money that cannot be loaned out by banks, that means that loans aren't being made. Debt is being either defaulted on or being paid back, and that shrinks the money supply because by the fractional reserve system, debt is money. Commercial banks create money by creating debt. If more of that debt is either paid or defaulted on than loans made, the money supply shrinks. Hence, the money supply is shrinking here. Now, this is the extra money that cannot be loaned out. Instead, it is gradually being loaned out to the government itself. Once this money is out, there is no more dollars. There are no more dollars to lend to the government, and the repo market cannot lend dollars overnight anymore because the government is going to demand its piece. And if interest rates go up on treasuries, the Fed is definitely going to have to come in and start printing. Once these go to zero, it will be the bell ringing. It will be that day. I don't know. It could be a week, 2 weeks later, maybe a month later at most. But this is going to zero because of the deficits, because this extra cash is being demanded by the Treasury to loan, plug up the deficit. We have about a month left, maybe two, before this hits zero. And then the repo markets, the plumbing of the financial system should go haywire, at which point the Fed will have to move from quantitative tightening back to quantitative easing for the last time.
Well, this is it. This is the last minute.
If you want front row tickets to the endgame as it unfolds, then please subscribe for free to the Endgame Investor at Substack. Link in the description below. And if you would like some biblical guidance during this time, then sign up to be my patron on Patreon for a weekly lesson on biblical perspectives on money, economics, and government. Looking forward to a very interesting, exciting, and tumultuous 2024. Keep stacking and have a good week. When you buy precious metals with Miles Franklin, you're not just protecting your wealth and your family's future. You are helping us physically chip away at the base of the inverted pyramid that keeps this inflationary machine of corruption turning. Together, we can tip this thing over for good and return the world to sound money, 1 ounce at a time, with balanced living and a better future for our children. Call us at 855-GAME-END. That's 855-426-3363 to place your order today.